Good morning, everyone. Well, New Zealand, an exciting morning, an exciting webinar as far as I'm concerned, and as far as many property investors, well, all investors should be concerned. We've got interest rates that have been going down. They've been sliding as of last night. I think we are at 5.69 is the latest. 5.69. And so, where does that take us? What does that mean? So, this morning, I'd like to talk about that for a little while with my guests, and then to go into how this can be of great opportunity for my investors now, because this is the start, I believe, of the slide in interest rates. Also, we'll talk about the areas in which to invest. And of course, now it's so much more relevant. If you've been deciding and thinking about whether you're going to invest in property, I've got to say, now is the time to do this. And to help me talk through the opportunities and the implications of a falling interest rate, I've got this morning with me Darren Brown, who is a successful developer of three major developments in central Auckland and about to start his fourth, and Brent Metrick from Green Homes New Zealand, part of the very successful national Watson Hughes Group. Both have had a long and illustrious career in property and understand the market so well. So perfect guest to join me to start this conversation with interest rates. So good morning to you both. Good morning, Darren. Good morning, Brent. How are you?
Morning, Nikki. How are you? Good morning, everyone.
Great morning.
Good morning, and I know that I'm sounding like a child at Christmas, but that's how I feel, because I think that I haven't seen a market such as this since 2001, where we had a depressed market, and then in 2002 we exploded as far as the property market is concerned. I know that that was probably a bit early for you, Darren, but you were talking about how you saw this as well, which is very similar to 2011. What was happening then?
Yeah, so around 2011, 2012, we had just come out of the GFC, the global financial crisis. Property prices had been depressed for a couple of years. No one was buying property, and interest rates had been really high, and then they'd started coming down. So it's not quite identical to 2011, 2012, but it's got a very similar set of circumstances. So if we have a look at where we are now, and just on your point, the Reserve Bank announcement this week is huge. I don't want to underestimate what this means to the market. So if you look at it, just 3 months ago in May, we had the Reserve Bank governor saying that he wasn't going to reduce interest rates until August next year. And literally 3 months later, he's come out and already made the first reduction. And more than that, he said that over the next year, he will be reducing or expects to be reducing interest rates by another full 2 percentage points over that time. So that's huge. If you've got a mortgage now, it's 2% less that you'll be paying. So
I've got to say that I've got a bit of a smile on my face, because I did predict that it would go down, the interest rates would go down twice. I was wrong. I think we're at the third, aren't we, at this 5.69 for 5 years?
yeah, well, I mean, you've obviously got the bank retail rates, and then you've got the OCR that the Reserve Bank governor controls. And the banks typically get their funding through the Reserve Bank, but also through other methods in the wholesale markets and what have you. But in a nutshell, what that means is that when the Reserve Bank is reducing their interest rates, that means that the retail banks, as you're rightly pointing out, will start reducing their rates as well. And we have seen that already. And you're right, some of the longer term rates, the 5-year rate, I think you're talking about there, some of the banks are down to that sort of 5, 6, 9, I think, isn't it? So, and that indicates that all the other rates are going to be getting a lot lower as we go over the next couple of years. So,
Absolutely, because
yeah,
as we know, what happens is when they see that what the future holds and interest rates going down, they give an attractive, what looks like an attractive rate today on a longer term to keep you for that amount of time.
yeah.
Brent, when was the last time that you saw the opportunity that we're now seeing?
Oh, look, it was quite a few years ago, but it is a repeating cycle. Let's face it, at the moment you've got pricing that's tight. It's tight market pricing out there, but at the same time, people aren't able to afford it because the banks are testing too tough. Now you've got the situation where the banks will be testing a lot better because in the future we're not going to need to test at 10%. They can see that on the horizon that it is nearer the 5% mark, so they'll test at 7 and 8 or thereabouts, and that makes it just an ideal opportunity because you're going into what will become a rising market, and this is what we've seen over the past, and there's no reason to think that it's going to be any different. And with a rising market, with a lowering interest rate, that just makes margin.
Oh, absolutely. But let's just go back to explaining what you were saying with their test. Now, I don't know whether uh, the average person realizes that even though interest rates may be lower, or as they have been in this, 6.9 or 7 or whatever, that when you go to look at getting a mortgage, they won't look at your application on that interest rate. They increase that, and as you said quite rightly, they've looked up to 8, 9, and even 10%, and to see whether you are able to service that mortgage at that level. So a lot of people and a lot of investors that we've seen over the last few years have not qualified for a loan for an investment property because of that. So what you're saying now, Brent, is of course that as these interest rates go down, the banks now have to look at that serviceability for investors or for homeowners at a lower rate, which is, once again, it brings a lot more people into the market. Absolutely. So what typically happens? So let's talk about this. So we talked about 2001, 2002, 2011. Absolutely. I've got to say that I started Propeller just after the GFC. We look at just after COVID. At each stage, I honestly, absolutely believed that property prices would go up, and it was almost like a cry in the dark or in the desert, but it was proved correct. And those people, those first adapters that we like to, not the herd, the first adapters, those that saw that, like now, made a great deal over time, because as it's followed by the herd, and it's a horrible expression, but it's everyone else that's seen that opportunity, as soon as they rush into the market, that's when property prices will actually shoot up. So, Darren, is that from your experience as well? Because you've done this
Yeah.
with 3 developments in central Auckland.
Yeah, well, and that's right. So if we go back to that 2011, 2012 period, which is pretty much where we are now at the start of the cycle, and just if we go back a little step as well, we know that interest rates are going to go down, right? But what does that mean for people that own property? Well, firstly, their repayments on their mortgages are lower. But secondly, and this is the most important thing, and if you learn nothing else today or hear nothing else today, I want you to hear this. When interest rates go down, property prices will go up.
Yeah.
Right? There's a correlation. So over the next year or two, as interest rates go down, the property market will be going up. And the key question then is, as an investor, how do you take advantage of what's going to happen over the next 2 years? And that's the question I think that Nikki's going to be talking about today. But there is a unique opportunity right now that you mentioned the herd. Yep. By the time we hit next year, once we get into next year, property prices will already be going up. Interest rates will be quite significantly lower than where they are now. And the people that are buying now are the ones that will make the most money. And the people that buy next year will also make some money, but not as much. And then the people that buy in 2026, once they realise, oh wow, property prices have gone up by 15% over the last year and a half, and that's an estimate in my account, but I think it would be something similar to that. Then they go, wow, property's a great investment again, let's jump in and buy a property.
Yeah.
But by then, a lot of the money's already been made. And we saw this back in our first development that we did back in 2011, 2012. We started selling off the plans, I think it was around 2012.
And
it
I
was
think
called
we
Sugar.
had about, on that first development, I think we had about 25 in your.
Yeah, about 25 of your clients bought into that first building, and that was buying off the plans with settlement 2.5 years after that, which is what we're doing with our new development actually. But so the people that were buying at that point in the cycle, by the time they signed up around 2012, maybe 2013, and we finished the building in 2015, so about 2.5 years. Most of the people, all of the people who bought off the plans made money. And they were making in the hundreds of thousands of dollars off that purchase because they had bought at the bottom of the market cycle and sold or settled after the market had gone up. And it's exactly the same set of circumstances now. And I know you talked about buying off the plans later. It's not always a good time to buy off the plans. And, you know, as a developer, I can say that I'm probably doing myself a disservice by saying that, but at the end of the day, it's not always a good time to buy off the plans.
Yeah.
If you are going to buy off the plans, you want to be doing that into a rising market and not a market that's already at the peak. So there's something to be aware of for investors. But now is an excellent opportunity, and you're not going to see these same circumstances that we've got now. You're not going to see that come together probably for another 10 years. So you've got a very small window over the next 3 to 6 months to really take advantage of the rising market. It's about.
Yeah. And Brent, Green Homes is predominantly house and land and dual income. Where do you see prices going yourself with that in Christchurch? That's your particular market. Looking
There's a
at
bunch
where
of
we go.
things all moving around this, Nikki, and look, one of them is land. So land in Canterbury, and if I just circle Canterbury hasn't done the big boom and the big bust. It's reasonably more level, although it has come back. Now, what's occurring is the people that have bought the sites at $400,000 are now actually selling them for around $350,000. Now, what's occurring are those 350 sellers have now dried up. So they're starting to disappear off the marketplace. So therefore, the newer stuff that's coming on at the higher rates are actually starting to come into play with the calculations of putting a home and a land together. The other aspect is all the trades. Now, when you're a tradie and you're not busy, your rates that you're going to offer to do the work are going to be at X. Now, when you are busy and there are 4 people tapping you on the shoulder, they're going to be X plus. Now, that is something that plays out in time as the market heats up. Now, at the moment, building numbers if you look at all the stats, are reasonably low. And that means that the pricing that's out there at the moment is pretty good. You know, it's certainly back on what it used to be, and it's now a lot tidier. There isn't the built-in inflation that everyone was expecting, and so on. So it's become a very stable market to build. Now, will that change as effectively everyone says, it's time to build a home? Undoubtedly. And we would see that pricing will escalate in the nearer term.
Well, I suppose it's been difficult, you know, first home buyers with the interest rates that have been, people that are, as you said, building their own house and land. But I was talking to a mortgage broker yesterday who really believes that with the banks, we're looking at a 4.5% interest rate early next year. Now, when you talk about tradies and you talk about the availability, that difference to people who are now have been waiting because they couldn't afford the repayments on a mortgage, the landscape's completely different. So we've had people sitting for 3 years waiting that are now going to, I believe, surge into the market. What does that mean? What does that mean for building costs? What does that mean for availability? And of course, as we know, when there's not the availability, prices go up as well. So that's not just house and land. I mean, if we are looking at Auckland, for instance, I come back, Darren, to where we are in Auckland at the moment with the demand for property and the fact that first home buyers were just starting to look at apartments, because apartments were in the 600,000-700,000 mark, which they could afford, and they could use their KiwiSaver and have the supplements. And now, of course, you've got lower interest rates, more people surging into the market. Where do you see Auckland heading, and Central Auckland as well?
Yeah, Auckland's been an interesting market. So we had obviously COVID and property prices shot up by about 40%. And then we had, that was through to the end of 2021. And then they've come back about 20% since the end of 2021. So, Auckland's market has seen a bit of a roller coaster. What we saw on the back of that is that we saw a lot of projects being built that were committed to back in that 2021 period, and they're kind of all been on the market now. And if you look at the Auckland market, there has been a bit of a surplus of stock on the Auckland market. It's been largely that townhouse product, which seems to have been just done a lot up here in Auckland. But that's changing. So what you've seen is that building consent numbers in Auckland have gone through the floor. So we compare, they've just released the figures for June in Auckland, number of building consents, residential building consents. There were just over 700 consents in June. And if you compare that to 2 years ago when there were nearly 2,000, that's a drop of nearly 60% in 2 years.
That's huge.
And that's huge. And you're not seeing that in the market right now. But what you will see is that next year there'll be a lot less being built. And yes, there might be a slight surplus of property on the market in Auckland right now, but the minute we get more buyers into the market on the back of these interest rate reductions, and then the number of new builds that get done or get built, committed to, they're falling away rapidly. So we're going to see a shortage of product, shortage of property on the market next year. And when that happens, that's when we're going to start to see prices really start to ramp up. And also, the other thing we haven't even mentioned yet is immigration. Immigration is running still, even though it's come off a little bit lately, it's still running at nearly 80,000 net per annum into the country. And if you have a look at that historically, half of those people come to Auckland. So Auckland's population is growing. It's one of the fastest growing in the country, and it's predicted to keep growing. So, at the same time, you've got record levels of immigration, or near record now. You've got building consent numbers have more than halved in the last couple of years, and you've got interest rates about to go down rapidly.
It's a
everything
great opportunity. I mean, it's not just us talking up the market.
No, what we're talking about, Nikki, these are things that anyone can go online and see all the figures for themselves. They can look at this and they go, okay, well, I can see the immigration numbers. I can see what the interest rates are doing. I can read Reserve Bank Governor's, report and forecast. I can have a look at those population numbers. I can look at the building consent numbers on statistics.gov.nz. I can do all of this research and just see exactly what we're saying. And then you work it out. What do you think will happen to the market over the next 2 years? And I'm not telling or saying anything that is controversial. It's just logical. So, this is the time to get involved if you want to do it.
Yeah, and of course, all of this impacts on rentals as well because it's availability. And Brent, when we look at down in Christchurch and we look at Rolleston, and we'll talk about that in a minute anyway, that's another area where people from not only from immigrants coming in, but from other parts of New Zealand that are moving to. And I think that if we look at the availability for rental in the likes of Rolleston, there is a major shortage already. So where is that heading? Now, what I want to have a look at. So I am seeing that already. We've got the first adapters. I'm starting to see more clients come back to us, by the way. So existing clients of Propeller coming back to us. And we're now getting people calling in saying, I've been sitting there and I'm waiting, and can we now investigate what it's going to cost us to get an investment property? And it's quite interesting that I saw clients just over 2 weeks ago, and I had some cash flows for them, and I had that cash flows at 6.99. And then if I played around and had a look at those now, even if at the 5-year at 5.69, and I've not for a moment am I saying to my clients, go on 5 years at 5.69, because even if you take a bit of pain for 6 months, you're going to get lower interest rates. But the figures were quite considerably different and a lot more attractive. So we're seeing that starting to happen. But conversely, what we're seeing is developers are seeing this happening as well. And so developments that I was just completing my due diligence on before I recommended them to my clients, the whole development in one instance was sold out within a week. Within a week.
Actually, it's quite funny you mentioned this. I mean, we did a seminar down in Christchurch earlier on the start of this week.
Yeah.
And after the OCR announcement this week, the amount of inquiry we've had after that has been incredible. And people have just gone, wow, we can see what's about to happen. And it's been just really eye-opening how quickly things have turned around, even over the course of a week. So, yeah.
No, absolutely. And the other part of this is that I was negotiating with developers such as yourself, to give my clients some incentives to actually purchase. So this was even a month ago, over the last couple of months, where we had cashback opportunities, free furniture, subsidized rental, all incentives to have investors come into the market. And of course, we were at the lower purchase price once again, because we've been at the bottom of the market. Well, those incentives are now going. I'm having to hold on to those for the next couple of weeks for my clients. And I think when we talk about your development over in Birkenhead, for instance, I'm clinging on to those incentives that you gave my clients just to give them that opportunity before you say, you don't need to anymore. You don't need to. But
pretty sure I already said that to you, Nikki, but I think you've tried to.
No, I'm clinging. I'm clinging.
Yeah.
No, you're going to give me a couple more weeks. That's all I'm asking.
I don't think you've got a couple of weeks, but you might give you a few more days.
So here's the other thing that I think is very interesting. Let's talk about buying off the plan. Now, Propeller only sells brand new or off the plan, and for a number of reasons. And very quickly, those reasons are that the deposit that's required, or the deposit that's guaranteed against equity in your home, is only 20%. On a built property, it's more like 30%. You've got no maintenance and repair issues for the life of that property because of warranties and guarantees, unlike an older property. You don't have healthy home issues and trying to make the property compliant, because all of the properties are compliant. You don't have tax implications a little later down the line. And of course, with brand new property, you've got a better quality tenant and a better return for your investment with rentals. So buying off the plan always makes sense for our clients. And how they structure this is that whilst the property is being built, the mortgage broker organises a 10% holding deposit until the property's built, and then the other 90% is then paid over from the bank. So that 10% is held in a solicitor's trust account. So let's just start with that. Now, we've got interest rates that are going down. We've got properties that are 6 months away from being built, 12 months away from being built, and 2.5 years away from being built. What does that mean for you? So let's just start with, once again, going to Darren with your development that's 2.5 years away, and why I've got so many clients that are just so interested in investing in this because of that 2.5 years. So let's just talk about what that means for
Yeah. So,
my investor clients.
so we've talked about interest rates, and we talk about where they're heading over the next couple of years. And as I said, interest rates, even based on Reserve Bank projections, are going to be over 2% lower in a couple of years' time. We know that reducing interest rates means increased property prices, right? So we've got those parameters in the market right now. How do you take advantage of that? Well, one of the best ways that you can do that is to buy a property in today's dollars now. But you don't have to settle on a property now. You can actually, as you're saying, if you buy a plan means you can basically buy a property now, but you're not paying for it now. So you're buying a property, you're only putting a 10% deposit down. That's held in a lawyer's trust account. And then you get to almost ride the wave for the next 2.5 years while that property is being built. So you're buying today's property prices, but you're not settling until tomorrow's property prices. So you're hoping, and to be honest, expecting that through that 2.5 year build time, your property, you might have been bought it at today's price, but in the future, it could have been gone up over that period of time by 15 or 20% in this kind of market. So that's how you're really looking to take advantage of the reducing interest rates and then increasing property prices.
Yes. So sorry. So what we're also saying is that you walk away, you put your 10% down. The mortgage broker borrows a little bit more to take care of the interest cost on that 10% because you're getting that from the bank. You walk away. So there are two things that are happening. As you said, the potential capital gain as the property goes up, but of course, you're not paying any interest.
Yeah, well, you're not paying any interest along the way.
Today.
Yeah. Actually, the other really important point to note on this as well is that with the Brightline changes that have just come into place from the 1st of July, I think it was, if you hold a property for 2 years, then you're not paying any capital gains tax at the end of it when you sell it. So buying off the plan for a 2.5 year timeframe project like ours, you're buying now. By the time you settle, you can sell that property, and in most cases, you're not paying tax on it, and you're getting basically tax-free capital gain at the end of it. It's just such a good scenario for people.
Oh, no, it's brilliant. And of course, there has been confusion about that. And I say to my clients, no, that Brightline starts when you confirm on that contract, not when the property's finished, when you confirm on that contract.
Correct, that's right.
So I've got a couple of clients who are very savvy investors. We always like our clients to get pre-approval before they commit. But we've got some savvy investors that don't need to do that and have put their 10% down because it's just money that has been sitting in the bank. 70,000 or 100,000, that's maybe getting them 3%. And then they're paying 39% tax on that. They've decided, and this is something that I did so much over the last 10 years myself, put that into an investment property held in a solicitor's trust account, And so these investors are looking at selling those properties of yours before they even settle on that, and looking at taking out that potential capital gain and the original deposit that they put on that, and not paying tax on it. Now, it's a risky strategy. They need to know that they can settle on it. But I've probably got about three in your particular development, 3 of my clients that are doing exactly that.
Yeah, well, I mean, you always go into these things expecting to settle at the end, and if for whatever reason you decide that you don't want to, and your circumstances have changed or what have you, and you decide that you want to sell, closer to completion, then that's something that you can do.
Yeah.
So yeah, look, it is a good way of I mean, we talk about interest rates right now. Yeah, maybe people are earning at the moment they might be earning 6%, but you're right. You take off 40% tax, and it's down a lot lower. Maybe they're down to 4% real return. But in a year's time, that 6% is going to be down at 4%.
Yeah, because cash is not
Right?
inflation proof. No,
Yeah, that's
exactly.
right. And so this is why you also see when you've got a lower interest rates that are reducing, it means that the money that you put in the bank is no longer earning a good return. And we'll see that. We'll see 4% rates in a year or so.
Well,
And
that's
then
right.
putting down at 3%. And then it's not even covering the tax that you've got to pay on the interest, and it's not covering inflation. So that's why then people go, well, hang on, I'm getting nothing in the bank. What do I do with my money? And that's when people start putting money into the property market, and they start putting money into shares because they know that they're going to get much better returns.
Yeah.
And so that's one of the other reasons why you're going to see more and more people climb into the property market next year as the interest rates, money in the bank start going down to levels where it's just not worth it. And, it's not happening yet, but it's about to happen. And everyone can see it's about to happen.
Yeah.
And the people that are going to gain the most from this current set of circumstances are the people that act now.
Yeah.
We can all see it's going to happen. Yeah.
And Brent, with the house and land that packages that we get for our clients, typically we're looking at about 6-8 month build time for those. What I like, and one of the reasons why Propeller recommends Green Homes and your properties in Christchurch, is that for most house and land builds, developers or builders want to have progress payments. So when we are putting together cash flows, we have to add another 30 or 40,000 into the cost of that build, and our clients are paying because they're having to pay interest. Now, when we look again at buying off the plan, the great thing is it's the same with yourselves as it is with Darren and his development, that it's a 10% holding deposit. That's all it is, all the way through the build. It's that 10% sits in a solicitor's trust account, so that by the time that they that the property is completed, let's look at what the interest rates will be at that stage, what the rental will be for house and land in areas that have a chronic shortage at the moment, and what the value of those properties are going to be. So I think that it's once again, whether it's 2.5 years or it's 8 months, there's this fantastic opportunity.
Interesting stat that I pulled up yesterday, and this was just I was looking at some affordable home statistics. So I went onto the RNZ website and said, what has Selwyn done over the last 12 months? And the latest figure was up to February. And even in the depressed market that we've actually had, pricing rose by 4.9%. And that was from February this year back 12 months. Now, that would have been probably one of the most depressed areas,
Yeah.
and it's still with 4.9%. Now, I don't see it staying at that level. I can only see it moving, particularly with the lowering interest rates. An interesting point last week, Nikki, was that our show homes had a 40% increase of traffic. Now, that's telling me the market is starting to turn. People start looking like that. We see that as about a 4-month lead-in before they, the traffic starts and then the contracts start to follow.
Okay, so buying off the plan, I think, is a wonderful strategy at the moment, especially if we are looking at the Reserve Bank with their projections of reducing interest, by rates by about 2%. So that even when we put together our cash flows based on what interest rates are today, it's going to look so much better by the time that they settle. So when we look at the areas in which Propeller particularly target for that growth, to take advantage of that growth, and also to take advantage of rentals, what is going to drive the rentals in those areas? So the 3 areas that we are particularly focused on are Auckland, Hamilton, and of course, Christchurch. And it's good, solid builds in areas that have got demonstrable growth, demonstrable demand, and that we see going forward great opportunities for our clients. So my guest on from Hamilton wasn't available, so I'll talk about Hamilton in a moment. But I think if we just go back, and I know that you've already talked about this, Darren, Auckland is the most dynamic area. It has the highest rentals. And I always say to my clients, it's like a blue chip stock, if you like. Whilst you still can, it's good to have something in this area. And so with Auckland and its growth, I mean, you were saying that we are looking at what? An increase in population by quite a considerable amount over the
Yeah, well, if we look at Auckland, I mean, I'm very bullish on Auckland. All my property, and I own a bunch of rental property as well, because I just I'm a developer and I own rental properties. I just so believe in rental property and the property market, and everything I have is in Auckland. The reason I have everything in Auckland is that Auckland is the largest city in the country. It is the fastest. It might have just been slightly overtaken recently, but it'll only be for a short period of time. But it's fastest growing region in New Zealand in terms of population. So if you're looking for capital gains, you want to see a strongly rising population. Typically, half the migrants that we get into New Zealand settle in Auckland. If we have a look at stats, REINZ has some stats that go back through about 1992. They show that over that 31-year period, Auckland typically has an annual growth of around 7.1% versus 6.2% for the rest of the country. So generally, it's faster growing. Also, there's studies done showing where cities are in relation to their long-term average or the national average. As at the end of 2023, there were studies showing that Auckland is about 9% undervalued. So it's got further to catch up when we go through this next period of growth. So for those reasons, I mean, the Auckland, and particularly the part of Auckland where we are developing on Auckland's North Shore, is, according to the latest Trade Me statistics, has got the highest rents in the country, rental district in the country, the North Shore. And so, Auckland property prices certainly are higher than around the country. And so if you're buying a freestanding house in Christchurch, the comparison would be, say, an apartment up in Auckland for that similar price points. But you're getting, as good a rent for what you're buying in Auckland, and also you're getting access to the largest market in the country. So yeah, I'm very strong in Auckland. I believe in Auckland. That's where I invest my money. So yeah.
Okay. Part of that it's called the Golden Triangle, is Auckland, Hamilton, and Tauranga. Now, Hamilton has been one of our favourites for many years, and it started because when I came back from the UK and I saw when I was living in London that when Londoners, they can't afford to live in their city anymore, they move further and further out. And I looked at the opportunities and what was happening in Hamilton. So we could see that the inland port was being built and there was 15,000 to build that. And then there was going to be 11,000 to then man that port. The superhighway was being built. I could see that there would be the need for the commuter train to come back on, and which it has. And so what we are now seeing is that there's a lot of commuting between Hamilton and South Auckland and the airport, and it has become a part of that commuter belt. So Hamilton, a strong economy. I think the forecast for population growth is up to 237,000 by 2048. It's they're saying that in this Golden Triangle, that is 53% of New Zealand's population will be housed within that Golden Triangle. Now, when we first started recommending Hamilton to our clients, you could get a freestanding house for in a really good area for mid 500s. So that was about 8 years ago. I've got clients now that are selling those same properties for 1.2, 1.3. So they've done incredibly well out of that. And I don't see that that's going to change. We've got rents that are going up, and they've risen by $100 a week between 2020 and 2024. And now, of course, what's also come in is council restrictions, which means that, and there's a scarcity of land to be developed in Hamilton, which all are going to contribute to the rising costs of building there. So with the developments that we're recommending to our clients, two particular that we are really believe is going to make some good capital gain for our clients. One development is not ready for just over 12 months. It's in the best area in Hamilton. And when I was looking at the availability for rental in that area, this was on Trade Me 2 days ago, there was only one property to rent. So there was a huge shortage. And the property that we recommend is a 3-bedroom property that is $100,000 under the average price of property in that area. And that's because the developer land banked that property a few years ago. Another is being built and will be ready very shortly, is in another area with a very high demand. And of course, I'm still getting the incentives from those developers where we've got a guaranteed rental for 2 years, or we've got a cash back of up to 15,000, 10 to 15,000. So that's not going to last very long. But I think that when we look at the growth there is still a huge amount of growth. And as we see the property prices rising in Auckland, once again, this means that those areas that are outside of Auckland with a great lifestyle are going to be wonderful opportunities, but their prices are going to go up as well. So that's part of the Golden Triangle and why we recommend that to our clients. And Brent, the other area that we recommend and our clients absolutely love is Christchurch and Rolleston. So tell us with what's happening there, because yeah, I can see that just exploding with interest rates going down because it's already so popular.
What we've got, Nikki, if we look at Canterbury as such, the two main areas that are going, we've got Christchurch City, but we've got also Selwyn District. Now, Selwyn District was the fastest growing behind Queenstown. And in Selwyn, for example, and I just take Rolleston as part of that, but if we took Rolleston, Lincoln, Crebbleton, three main bustling areas, very much on the periphery of Christchurch. We've got motorways right into play. Now, what we've got in those areas, for example, it's about the tenant. Now, in Rolleston, we've got 6, and now they've just approved a 7th primary school, all high decile, all completely done, decked out. But in Lincoln, we've got the university, 3 Ks from Rolleston. Now, we've also got a large college, which in actual fact we're doing the extension on at the moment, which will be just over 2,000 people within that. Now, when you've got that sort of growth and people wanting to be in the area, there's your tenant base sitting there. And at the moment, there's not enough homes being built to actually placate that tenant base. And so what we're finding is, from an investor perspective, the minute the house is finished, there's a lineup of tenants. So the minute you start to pay is when the rent is starting to roll in. And that's really, to us, part of the key. And look, from a builder perspective, and I'll just put the builder hat on, it's flat land. It's good land. It's very stable. There's some of it and more coming. I've got to say the only downside I can see at the moment, and I'm a bit grumpy about it, is the Selwyn District are putting their reserve fund contributions or the capital contributions up at the moment, and I'm doing a grump about that. But in saying that, they're where they are at the moment. We're making it work.
Yeah, I tell you, at the moment with some of our clients, I mean, there's been such an interest in your what we call dual key. Now, this concept, I know that the window's closing on this, which is like a 3 or 4 bedroom house with an attached 1 or 2 bedroom unit, which can either be as a granny flat, as an income producing unit. It could be for elderly parents. It could be for teenagers. Rent it out. The price is a lot less than 2 separate properties because it's all on one title. But the rent is so high. I mean, if we're looking at properties that are in the 900,000s, we're looking at rent at 1,100-1,200 per week. And in this area with that huge growth. So we've had a lot of clients that are purchasing properties like this in Rolleston, because, where else in the rest of the country could you get something at that freestanding at that price point with that sort of return? And of course, at the moment as well, with it being 8 months or 9 months from being completed, what is the interest rate going to be on that? And so what is going to be your return? Your ROI on that is going to be really high.
Certainly, the capital gain is going to be there, and I just had a discussion with a client last night who we finished a house for 6 months ago, and came straight back in to say, "What else have you got?" And I've got to say,
that wasn't one of our clients, by the way, that came directly.
No, it was one of our ones. I've got to say, nevertheless, when I sat them down, it was a bit of a disappointing conversation. They wanted what they had, and we couldn't repeat it. There was no way. But in saying that, they now understand what's happened in the market to a degree, and there was that a little bit of that 4.9%. So with a slight adjustment, as they said, the figures are stacking up. The tenants are happy. Look, we've just got to do something.
Yeah. And that extra price point at the moment, because interest rates are going down, doesn't make, it's almost like it's the same price with what you're actually paying out with the paying off the mortgage or the top up on that. So yeah, I mean, I can see that we're going to be requiring a lot more. I mean, we've been asking you constantly, what more have you got? Because these are a particularly great investment option for our clients.
Particular, Nikki, it's a combination of two things. Number one, you've got the property prices going to move up, so that increases equity. But it's the next point is that as those interest rates go down and the excess of rent goes back into the property, the equity is rising again. So it's a two-edged sword that's cutting both in the right direction. And I've got to say, after the last few years, it was always cutting in the other direction. So it's nice to see it come back to where it should be.
No, totally. Now, just going back to Auckland, I had a client a couple of weeks ago, Darren, who said, I want a freestanding house in Auckland. And I'm pretty straight. And I said, you can't afford a freestanding house in Auckland. We sell, obviously, brand new or off the plan. And a freestanding house in Auckland, even if they went out into the suburbs, was not going to be within their price point. No. What we needed to look at was the return, the rental, because it's about the investment, first of all, and what suits that particular client. So this is where I think a development such as yours, which is a high spec development in a very upmarket area, provides a wonderful alternative at a price point which is more affordable. So let's talk about Chelsea Rise.
Yeah, I mean, it's a really good point that you make in the area that we're in. So for people that know Auckland, we're in the historic coastal village of Birkenhead. We're perched right up high on a ridge looking over the water out to the Hauraki Gulf and across the Sky Tower and the Harbour Bridge and the CBD. So you're only 8 minutes from the CBD, but you're outside of that. The views are spectacular. You've got all of the amenity on your doorstep. You can literally walk to cafes, restaurants, supermarkets, medical facilities. You've got public transport outside your door. You've got a ferry just down the hill that goes into the CBD. So location-wise, you're just not going to get better in Auckland. And this is one of the benefits of having apartments is that you can genuinely get prime location. And this is a premium product that we're building. And there are a lot of owner-occupiers in the building, which means that as an investor, you've not only got really good quality tenants that are going to look after your property, but when you do come time to sell, you're not just selling to investors, you also get to sell to owner-occupiers as well. So you've got both options there. One of the interesting things, Nikki, we've talked about this as well, although the long-term rental yields are also very strong, even better, because of all the boxes that this development ticks, we've been assessed by a couple of Airbnb operators that manage a large number of properties for their customers. And it literally ticks all their boxes. They can't wait to get some Airbnb rentals in the building. So typically they expect that Airbnb will return between 30 to 50% higher return than standard rentals to long-term tenants. Now, there is a bit more work involved with Airbnb, but at the end of the day, it's certainly an opportunity for people that want to do a bit more work.
But it's not a lot of work that's involved because the Airbnb company take on.
Well, that's right. The Airbnb company, you can either self-manage, which some people do, or you can get an Airbnb company to do it all for you.
Yeah.
So
we always recommend the experts, and we've put
Yeah,
together cash
absolutely.
flows for both, whether it's a long-term tenant or an Airbnb. And when
Yeah,
we're showing those properties to our clients, we're giving them both options
yeah.
with that.
Well,
But
and that's right.
but you see, this is the other thing. Because of its location and the price point, we've got properties in the likes of Te Atu and Henderson that are townhouses. Now, they're great. They're townhouses. They're 2
Yeah,
and 3 bedroom townhouses, some with off-street parking, some not.
yeah,
But they're in the same price point, but they're out further than
yeah.
Chelsea Rise. But here's the kicker: the rent isn't as high.
No,
So the top up is a lot more because the rental there is not getting the same at the same level as an apartment in the upmarket suburb of Birkenhead.
yeah,
And
that's right.
so,
You pay for location as well, but also, I mean, look, the townhouses have been just sprung up all over Auckland and suburbs, and there are a dime a dozen now. There's a whole lot on the market that people are struggling to sell. And look, nothing wrong with the townhouses, and they certainly do suit some investors. But apartments they're higher cost, they're higher quality typically, and you do generally get better rental returns. You've got ability to access Airbnb. And typically your location is so much better. So because we're building more properties on the one site, um, you've just got the best of the best in terms of location.
yeah.
And as they say, property is all about location. So
Yeah, and you're quite right. Townhouses in Auckland are wonderful alternatives to freestanding houses because
yeah,
you can't spend millions on an investment property if your home is worth less than that. So yeah, I love townhouses as well. We were joking earlier about the fact that you're going to be taking away some of these incentives for my clients. Now, just going back to that Airbnb, we looked at what would make it so easy for our clients to make the decision to go the route of an Airbnb. So, the free furniture on a 1 bedroom that you're offering at 20,000, you're offering cashback on confirmation of the agreement of 10,000, and of course free uh, window coverings. So I know that
on those incentives, Nikki, as we put privately, yeah, we're happy to leave them open for another, maybe another week. But yeah, it's the market is now turned, and
yeah.
yeah, it's quite clear that we probably don't need to be providing those anymore. So happy to leave them open for you for another week or so. But yeah, that's okay. So
Well, I understand that, and of course, Brent, all of the property that is house and land, in fact, all of the property that we recommend, it's fixed price, and they come with landscaping and what we call completely turnkey, so that our clients don't have to do anything before
Yeah,
the
absolutely rent ready.
yeah, which is wonderful. And of course, once again, I'm trying to cling on to some of these incentives in Hamilton, but they won't last. We're up with our hour. I don't see that there are any questions. I think let's just have a last word from each of my guests, and before we say goodbye. Last words, Darren?
to make it brief, all I would say is that if you're looking to buy property or invest in property, and whether it's ours or whether it's Brent's or whether it's somebody else's, this is the time to do it. You will genuinely not get a better circumstances to buy property now than you will now. Not for maybe a 10-year period. So
Yeah.
if you're going to do something, do it now before everyone else jumps into the market.
That's great. Thank you. Thank you so much for your time, Darren. Brent, last words.
Look, I've got to say I've done probably a few more cycles than both Nikki and Darren on the
I don't know. I don't know.
front. So
I'm older
and
than I look, thank goodness.
But I've got to say, look, never has it been as predictable as it is right now. Look, we know the interest rates are going to move down. We know the demand's going to move up. It's really just that golden piece in the time. And look, there's a saying I use to my staff: it's never cheaper than now. And I actually think this is really relevant here. Yeah, and I've got to say, the package and the way in which the homes are put together in this arrangement with Nikki means that as the tenants and as an investor, you get the full process, and you're not getting shorted in any way, shape, or form. You end up with a great setup.
Thank you. Thank you so much. Propeller, if you don't know, puts together, we do all of our due diligence on the property that we recommend. We put together a strategy for you. We put together cash flows on those properties for you. And of course, that service is completely free. You're only dealing with senior consultants. If you would like a no obligation consultation, please call us on 0800 81 81 91 or email us at info@propellerproperties.co.nz. So my final word is, I want my clients not to be in the herd. I want my clients to be the early adapters and adopters, to enjoy that long-term capital gain, and quite significantly, before everyone else comes into the market. There is only that short window before we are going to see that rush of people come back. And remember, there are those that wanted to come into the market previously but couldn't because of the test that the banks were doing on their serviceability based on an 8, 9, 10% interest rate. That's going to go down. So those that have been wanting to get into the market previously and couldn't, now are going to be coming back as well. So I look forward to seeing you at some stage, because I'll be working on your strategy for you. And I hope that you look at what we've said today, think about it, and that you come in and talk to Propeller. Thank you for giving up a part of your morning, and have a great weekend. Thank you.